as well. Mr. Madan, hi, good to be speaking with you. Well, on Friday, your stock took quite a bit of knock, and that's because the street was worried about the decline that they're expecting in Q4, because parts of the street is expecting a double-digit kind of decline in your volumes. Is that something which could be realistic?
Well, what we talked about, I think, is the industry decline. Because if you see the months of January, we saw 15% decline happened in the industry numbers, even though our decline was much lower at about 7%. And the reason being the industry in the south and west, which is actually declined quite a bit due to the irregular rainfall. So you see the major deficit happening there. In the industry, degrowth is more than 50%. So fortunately, unfortunately, our presence in that market is not very strong. That's why our decline was much lower. So when we talked about the guidance, I think we talked about the industry guidance for the quarter, which we expect will be maybe double-digit degrowth may happen. But doesn't mean Escorts will degrowth because we are more focused on north and center where the degrowth levels are much lower. So in our case, maybe the degrowth will be much lower. But yes, industry we expect that degrowth may be there, temporarily.
Put a number to that? What is it that we can expect, in particular when it comes to your volume growth as a broad range?
So if you look at our YTD numbers for the first 10 months, I think we had degrown roughly about 5%. And we expect the similar number will be there. So it'll be mid-single digit degrowth this year. And now as you enter into the new year, obviously it depends on the guidance which we get initially for the monsoon. And if the monsoon is likely to be good, which is the indication we are getting now, then you'll see maybe growth will come in the industry, especially in the second half next year. But obviously, we're keeping our fingers crossed. So let's see how the guidance comes, for the monsoon.
So, Madan, at least in the first half of next year, the decline will continue, right? And recovery, if at all, will only happen in the second half of the year. Do we have that right?
It will all depend on how the Rabi output will be because the Rabi season was slightly delayed this time because of the delayed rainfall. So the sowing also got delayed. So let's see how the output happens there. So if the harvest season goes well, then we'll see probably a good demand coming in first quarter also. But having said that, since it's also going to be probably an election period, so there may be some slowdown in dispatches, which is likely. But maybe then it'll get made up, by the month of June. So I think we'll have to see, wait and watch. So it's very difficult to judge right now, how the next quarter is going to be. But luckily, this time the festival season has shifted from March to April, which is another reason for why the Q4 may slightly degrow. But then Q1 probably will do better. So let's hope. I think we're expecting Q1 should actually recover, compared to Q4.
Now, along with domestic, Mr. Madan, the international market has been facing some headwinds. So what's the outlook in terms of a timeline, perhaps how many quarters you would look at before you can see recovery?
So for our overseas market, this year, obviously volumes are degrown roughly 30%, and that's the industry degrowth also. Would we expect the recovery probably will start happening from next year, especially the second quarter onwards? There are certain products which are developing, which are in the process right now, and we expect the products will get introduced and launched, by second quarter next year. So we'll see maybe good recovery happening on export volume for next year, next fiscal. We're expecting 20-25% growth in export volume for next year in FY25.
But tell me, what about the other segments of your business, construction equipment, your railway order book? Have they managed to actually sort of cover up for the slowdown in tractors?
That's right. I think if you look at the last year, the infra story has been very strong. So we've seen that growth coming in both construction equipment segment as well as in the railway equipment segment. Construction business has grown more than 50% now in the first 10 months, and that momentum is on. And this is the peak of the season. So we expect February month will also be strong months. And railway business also has seen very good growth. In the first 9 months, we've seen almost 22% growth in the railway top line too. And the order book continues to be strong of more than 900 crores. So these two segments are continuing to outperform. And we expect the next year also will be a lot of focus from the government on the infrastructure is going to be there, looking at the capex plan, what government has really outlined in the budget, which is showing an increase. So these two sectors will obviously, contribute significantly now, both in terms of top line as well as bottom line, to this cost per unit.
Mr. Madan, despite the kind of headwinds that we have seen in terms of volumes, you managed to maintain your margins. That's partly, of course, on account of the raw material deflation that we saw in the quarter gone by. What's the outlook for Q4? Do you think this 13.5%, 14% kind of number be sustainable?
Yeah, we hope the number will be sustained. I think it will be in that range only. So I think we have been in the 13 to 13.5% range on the margin front at a company level. And we expect that number will get maintained in Q4 too. So in spite of all the headwinds we're facing, because it's not only the commodity prices. I think if you look at the price increases which have been passed on to the market and also other costs, which have been kept under check by the management this year. So there we've done a good job. So we expect, I think, the margin, guidance which has been there in the range of 13.5% will continue to be maintained. And then it will only improve going forward, I think, as you enter the next year in FY25.
And what's the outlook on your NBFC arm? When do you expect to start that? What's the plan with respect to that?
So we got the company incorporated. So in the process of now filing application to RBI for this license. So, but we expect, I think it takes about 4 to 6 months time minimum, before we get an NBFC license. But we hope in FY25 we'll start the operation in that company too.
All right. Thank you for giving us a deeper insight as to how the business is shaping up as well as the outlook. So recovery from Q2 of FY25 and 20 to 25% export growth is what is seen for FY25. That's Escorts Kubota for you.